investors.
The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Let me just do this real quickly. Here's the E-mini at 53.04. This is up 3.7. Look, there's this 10-minute chart. Went to a peak after the Chapman methodology. Then it comes down. The 200-period moving average has been a magnet for quite a while now. If at any point in the next hour, actually I should say the next 30 minutes, really, if there can be even a test, a break, it's at 53.05. If there can be a test of this high that was made, that's the 1-minute chart of 53.40. So let me see exactly what it is. 53.19. Yeah. So if we can get to 53.28 in the next, I'd say, it's going to be soon, 15 to 20 minutes. I'll discuss things in a completely different way because I just want you to see whether or not the patterns that I'm looking at are succinct, they are clear, and a break above 53.40. Oh, we're there right now. 53.40. That means that the 53.42 level starts a breakout with this resistance line. It's going to be really important. All right, so Dow's up 168, the S&P's up 25. Let's go to the numbers. I'll do this quickly because this is the Friday. I do technical analysis on a Friday, and it's very important to Chapman wave technical analysis. That is based on my decades and decades of building up my Sears and Roebuck toolbox. So the tools that I'm using right now are suggesting, and this is what I say to subscribers, that's why we actually started a position, a bigger position than we have before. And I said, this time you've got to have a wider stop, and let's see if it works. Now, let me just go for the moment. I'm going to go to the Dow, and I'll show you something that we'll see if it's able to at least garner some traction. We've got this arch formation, the dreaded H technical analysis. Everything I'm going to talk about today I will show in pictures because this is what we do here at TFNN. We talk technicals and we talk fundamentals, but mostly technicals. Tommy O'Brien does a great show early in the morning market kickoff. He mixes up his technicals and his fundamentals very, very well. And so I'm showing you this is an H pattern. 3 patterns, straight up, straight down. Cup formation, arch formation. You can mix 1 and 2 and 1 and 3. 1 and 3 is like here. It starts, it does a straight down move, then it arches over and it takes out the left side low. It means that if it closes decisively lower, watch out. You can go 1 to 1 or more to the downside. Wow, we certainly did that. We went to 36,661. Then there was that Wednesday spiral to the upside. Whoosh, up to the 14-period moving average. It just couldn't even be imagined, except we were talking about the volatility index, the VIX index, having reached levels of strain to the upside, going into the 45 level. And then all of a sudden you got that fantastic news on Wednesday afternoon. It had already spiraled to 60.17. Whoosh, it comes down. And now this is very interesting because the volatility index is holding the insurance policy that I can only imagine fund managers, heavy hitters, are building positions and have been building positions here, expecting that is going to hold well. What is Friday? Friday on the candle is where you get very sharp pullbacks. If every once in a while, like it did last week, it holds and it can go much higher. So this is why I'm watching this just on a purely, this got nothing to do with fundamentals. Fundamentals today were suggesting that there's lower inflation. That can you imagine the trillions of dollars that have been lost since the market went from its high just 2 months ago to the low would more than make up what all the tariffs will cost in the end. We don't know what they're going to be, but they're going to be much lower than originally stated. But you don't want to have that happen when the market is at its low. because then you don't have room. Okay, let's get this out the way. Volatility index up 96 at 41.68, holding very well. We need to just move this away because I know we had questions and I want to deal with those questions. Yes. So Fletch and the Dennis put University of Michigan 1 year inflation expectation 6.7% versus 5.2 estimate. So that is higher, but the CPI, other indications are that it has been quite a bit lower. So get this out the way. The volatility index is still extremely high and is suggesting that there's an upside cap on the market at this particular time. Right. Okay. Now let's go back to the story that we're looking at. We're going to run through all these because there's a ton to talk about. INDU, this is the Dow. Trading down 13, was up 100 and something just a moment ago. Just extremely nervous, trying to get a grip on things. Definitely, the technicals are very weak. The only thing that I'm looking at that is improving somewhat is the histogram, the distance between the moving averages, the 9-period differential, the red one, and the green. It's the red is the 26-period exponential moving average, and the 9-period differential is this green line, and it has been trying to move higher, and every day, even with the volatility, it's moved up, and it's getting narrower. It's not even close to turning positive yet, but I wanted to mention that. And look, there's this W formation in the 914, the 9-period moving average, pink, way under the black 14-period moving average. To get that to turn green, you would have to see a test of the 41.821 200-period moving average right there. I'm not even sure that would do it. So it's a long way to go. Weekly chart still looks very ugly, but it did get close to touching the 200-period moving average. Monthly chart, we won't talk about that. We have to wait all the way through the end of the month. Okay, we want to go to the S&P. We'll do this real quickly because they're all doing more or less the same thing. S&P is up. It's down now 1 at 52.67, kind of struggling. Here, the histogram is also moving up. The 9-period differential has a slightly better look than the Dow, and the stochastics rallied quite nicely to 43%. That's not bad action, but I would prefer that the price was at 53.92 at the 14-period moving average right now, rather than at 52.77 with the volatility, with the stochastic having a lot of room to move to the upside. I'm worried that the on-balance volume, the volume itself, is really quite weak. That's a little bit of a concern. Hey, let's go to the QQQ. So the QQQ right now holding quite nicely up 1 at 447.37. Here, the 914 has started to improve a little bit. The MACD's improved quite a bit, very close to turning up, but you need price movement to go from 447 to the 455 level with the black 14-period moving averages. And not only that, you want to see the stochastic higher than 45% at this particular point. Probably I would like to see 47 to 51%. All right, and the on-balance volume has risen a little bit, but it's not showing very much. Weekly chart, not too great. All right, IWM, slightly different. IWM has been much weaker, the Russell 2000, and I want to go to Bitcoin because I forgot to do that in the market update. Bitcoin right now is up to 29, almost 3,000, and that's going to be quite important for a couple of reasons, and I'll explain in a moment why. Just in terms of Bitcoin, because the 9-period moving average finally is improving a little bit, and the MACD is very close to turning up. The stochastic's improving. That on-balance volume is no good. I'll be back. Dow's up 64.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
We're back, and you can see that resistance level was very strong. Look, here's the 5-minute E-mini. It keeps going there, and it can't at any point, if it's able to get to the 53.42 level, that'll be important. But wow, it's striking. Look at the 1 minute right on support here. Fascinating. All right, here we go. So, let me do this. I'm going to go to questions as they come up because there's a lot to talk about. So first of all, Bitcoin was a question. So the Bitcoin, this is a good candle. This is a sandwich candle. When you get a big green, actually I prefer to have them all about the same size, but you got a huge green candle 3 days ago. You got a big red candle yesterday. You've got not as big as the big green candle, and you've got a pretty green candle today. Inside bar, lower than yesterday's high, higher than yesterday's low. Now, what's really important about this is that you see this Chapman Wave inside track resistance level, right, coming in there. Let me see if I can extend this out a little bit. Okay, there you go. All right, there it is. So sometimes you just have to move it a fraction because the trend line itself is dependent on the price movement, and therefore if the price just is a little jagged, I try to smooth it out, go for a kind of a median price right there. So that's, and I'm going to raise it a little bit more and go up to there. There. So you can see we're on the cusp of at least trying to push above the 200-period moving average of 83,724 in Bitcoin. Now, the other day when we were around about there, I was saying, I can't remember, was it there or there? But it was one of those big spikes. I'd said to Jacob in an interview that I thought there was a chance that Bitcoin at some point could become a kind of a go-to place if the dollar is very, very weak, which of course, very, very weak. It's not more than, it's more than very, very weak. It's taken out the low of September, October of last year in that 100 area. It's gone down today. It went down to 99.01. And it's trying to rally a little bit here. But if you look at the monthly chart, I said charts repeat, even if they unconnected instruments. Well, how connected is the dollar to the semiconductors? How connected is the semiconductor to, gosh, what we were looking at the other day? I said, if you take the weekly, it looks exactly the same as the monthly was looking the same as the weekly. Was that the dollar? Was that the was bonds? Anyway, look at this. So the dollar has come and is testing this left side low way back August of 2023. I'm watching this, and we spoke about this a while back. I said even when we're in the 108 area, I was saying, Trump in his first term has spoken about the dollar. He wants the dollar lower so that our goods cost less. Well, this is lower, right? So that's a very important thing. That's, in a sense, you can call, I don't know if you can really call it deflationary, but it has a deflationary aspect to it. And that says to me that within the context of the overall picture, that there's a slowing economy. Let's just go back to CTAS, CTAS. Well, it's still not bad. This is uniforms rentals. Let's look at URI. This is the rentals themselves. United Rentals. Yeah, this shows it a little bit better. This shows that there's been a kind of a slowdown. Maybe it's just their bookkeeping, etc. But something's going on in United Rentals, Inc. And it just says to me, in some of the areas in the market, in the overall economy, there have been, we can call it slowdowns, you can call it an internal recession within that. But absolutely, there have been slowdowns. Now, here's the key. So within the context of what we were looking at, the Bitcoin, I think is now a little bit independent. It's just in its own realm, and that's the reason why I said when it made that 110,975, I said, I think that we're looking at more of an intermediate, maybe weeks, maybe even months consolidation, and I think that's in the phase right now. And that's just saying to me, the resistance that this trend line is showing is remarkable, because it will take a move way into the 85,700, actually I'd even say 86,000 area for me to say there's now, at least in the daily chart, there's a trend change to a buy signal going maybe to a buy mode. You haven't got that yet. All right, so I was asked about Bitcoin. I would just say that if it goes under 78,000, arches over, you've got yourself another potential dreaded H. Got to be very careful. All right, now let's go to something else that I want to look at here. So I had questions. So let's go to the next question. Palantir. Palantir is trading right now down 275. Let me just refresh so I can get the daily chart going. There it is. A daily chart. And that just says to me that within the context of, here we go, the context of Palantir Technologies Inc. develops some data fusion platforms, and this is really military-based, most of it, I believe. And that's just saying that if you go to, look, GD, this is General Dynamics, had a strong pop just recently. I was having trouble getting the daily charts. There it is. And then it suddenly hit the 200-period moving average and a very strong spike. Raytheon. So in the whole area of the military, I think that there are places that seem to be still holding pretty darn well. But this is a little different in that it got so overbought, that big move up. Look at this, that big scream to 125, all in 1 week, basically. It was tootling in the 80 area, and whoosh, it goes up and gets to 125. And it just, look at this monthly candle, the long-legged doji. So if you are long, I would say I had this on my list for subscribers as something that I'd be interested in at least starting a position in, and I still feel that way, but I have to assess how it's handling the market at this point, and it's down 2.33 today at 86.24. That's not bad after the big move it had on Wednesday and held pretty nicely, even though it pulled back yesterday. So within that context, I'm saying if you've got, I'm still a little cautious about going back into, we've kept our core positions, which has held very nicely thanks to that huge rally on Wednesday. But I'm just rather being generic by getting something that is an overall market kind of benchmark, that if the market's going to rally, this thing should do okay. It's just one position that's kind of fresh. And I'm looking at other areas, and I'll go through those in a moment. But yes, I'm just going to say I would have a stop on Palantir that if it closes, look, this is a pink 9-period moving average. If it deflects lower, it'll do that if the price goes under 83.50. So at 83.50 to 83, that's kind of key support. I'd have some of my, if you got much lower down, that's an area that I would take something off just to say, all right, I want you to prove that you're okay, but I want you to, the 9-period moving average to turn green, and it hasn't. The MACD is good. The stochastic's not bad. It's 61. Palantir is something that's offering a little bit of strength and sustained strength. So in that sense, I do like it. But I think everything at this point is a little tentative because you really don't know. We don't even know where you're going to close today. So keep a stop in. And all I would say is if it gets to, it's at 86.28. If it holds support and by Monday or Tuesday, actually it's 91.75, that's the kind of action you want. All right, so let's go on. Next question was, do the 10-year yields, TNX.X, there we go. 10-year yields, look at that. Leg A, peak A, peak B. I'll do a little bit more work with this when we get back. And this is another reason why this market could be hazardous to your health. And you've got to be very selective as to what you're buying, why you're buying it, and for the stops to be in place. I'll be back in a moment. Dow is down 200. That was quick. 260, 271. S&P is down 38.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Kickstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Kickstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
So we were looking at the TNX, that's the 10-year yield trading at 45.51, 4.51%, 4.55%. Very big move. Look, in the Chapman methodology, this is the falling axe formation flag pattern. It's kind of like an expanding cone with lower highs and much lower lows, and then you break upside. And now, for the first time, you've got the pink 9-period weekly chart, the pink 9-period moving average, and the black 14-period moving average are moving in the same direction. It'll take a move to about 46.60, I think, to get that weekly close, to get that weekly to cross positive. So this is something to monitor. And if you look at the monthly chart, it did make a peak E, but it never went pink. The 9 still held beautifully. So I always have a little problem too. For years now, do I have a down arrow, which is normal? Look, you've taken so much time from, you've taken from 2023, that's October 2023, at 40, remember this gets smoothed out, but at that point it was 49.97, 4.997, and you've taken all this time, and just on time alone, it should be a down arrow. Then this would be peak A, still a gray A. If it breaks above that high of 2023, do I call that a brand new B, or do I say F/B? That's always the question. But the weekly charts really help you in terms of that analysis. Most importantly, what I am looking at here is that the MACD's got a huge extension to the upside. Stochastics at 82%. I have to put an up arrow saying there's a buy signal, and I have to wait a little longer to see whether it goes to a buy mode. Everything about it says, are you kidding? That really should be a buy mode. But let's just go one step at a time. So that's the 10-year yield is screaming to the upside. All right, now I want you to go through a couple of things that I was asked about. Did I do the FXI? FXI is up 55 cents at 32.12. Couple of 4 days here that has gone from the low of the 29s to the 32, today's high 32.49. Not bad as a bounce back over the 200-period moving average, but you can see that both the daily at 31.29 and the weekly at 31.37, those 200-period exponential moving averages are like magnets, and the further away you go, either up or down, the greater the chances are you will continue that way. But in this case, all I'm looking at is that I'm treating it as a bounce. None of the technicals are suggesting that it's anything more than a bounce. What was I asked about? Oh, Xpeng, I haven't even looked at it. Xpeng, EV, there we go. Trading at, it's up $1.30. Good. It's having a nice bounce here. It went right to the 200-period exponential moving average. We spoke about that, I think, 2 days ago. It's having quite a nice bounce from the 1513 area to 1927. Yeah, this is a nice, I'm treating it as a bounce as well. Now, I want you to go to, did that. Okay, I did the Bitcoin, just crude oil briefly. Crude oil, here's another deflationary aspect. Look, crude oil is way down to 60. I mean, 2 weeks ago, just last week, it was in the 70s, 72, 73. And look, 72. And here it is down, it hit 55, it's down to 60. There's a lot going on, folks, and it's to the credit of those people who said that this is going to be a multi-year bear market. At this particular point, I have to say they were correct in the timing of the turn down, and of course we also had it. We got the short positions near the top. Most importantly, if on Wednesday, the Dow hit 40,000. Let's call it 700, right? Well, at 40,700, you're down pretty sharply, but you're down 10% in the Dow. At the low of 36,661, you were down quite a bit more, right? But most importantly about this is that you have to ask the question, is this the start of a multi-year bear market? or is this 2/3 of the way into a huge consolidation? Now I'll explain something else what I'm looking at. If you go to Apple on a percentage basis, that the decline that we've had from 260.10 to the 170, I had to shut down yesterday my trade station. I just did something, I don't know what I did. But instead, I was so good about not having this shutdown and lose all my data every day, even throughout the day, at night, everything. I just kept on going to this thing that said right there, it says backup. And I did the perfect backup every time throughout the day. But after my show yesterday, I had done all that work. Remember, I did all that work on the instrument that was mentioned to me, a TFPM, in the den, the jambalaya, and I did all that work, and I lost it all. Unbelievable. I had to redo it. I didn't do it all the way I did it before. So, and let's just go to that to see where it is, because that was a materials play. That's TFPM, and that is, see, I haven't even updated it here. Triple flag precious metals. Look, it made another all-time high today. I had the beautiful cup formation. I did the time lapse and everything, but I lost all that. I'm not going to do it again. But this is in leg C. So I just wanted to mention there are some positions that are doing extremely well. If you look at the PHYS, which is the position that we've got in physical gold, spot physical gold at this is doing, we've got it at 20, it's trading at 20, almost 25. It hit 24.89 today. I'm watching this candle because here's the question, and this is technical analysis day. So I need to explain this. I had a question earlier on about the GDX, but give me an opportunity here just to do this spot physical gold units trading at 24.79. So here's the question. There was a peak D. It pulled back very sharply. The 9-period moving average held faint. It's like a spring-loaded move when it goes down and then it tries to rally back and doesn't go pink. 9-period moving average doesn't cross negative under the 40. I mean, this is a lesson for those of you who use these techniques, the 914, Chapman methodology, MACD, stochastic, etc. Look what happened. It sprang back and it did not go negative to give me a down move from a down arrow, even a sell signal in the daily chart. I probably could have put a sell signal because it was 3 closes way underneath the 14-period moving average. What do I do now? Is this an E? And this is a question I've had in Chapman methodology for years. I should ask Steve how he notates this in his work. I think he just continues the notation. So is this an E or is it a brand new E/A? That's a huge question. He says, doji candle, gap up, second gap, a third gap up, the 3 candles, a black crow, etc. Is this going to be turning down or is this really the start of another move to the upside? I'll be back. The Dow's down 105. I'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn. and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So let me just continue. So this is physical gold. PHYS is the symbol. So this is interesting. Look, you've got a little doji candle. This is 1 gap, 2 gaps, 3 gaps. And Tom O'Brien used to talk about the 3-gap play and used to talk about exactly what you've got to do, how you can handle it. What I'm looking at right now is that the MACD cross positive, the stochastic is at 58%. If it was 80%, I say, oh, that's fantastic. 58 says, oh, it's not that great. On balance volume's a little bit overbought. Weekly chart, on balance volume, the stochastic, though, is at 92.91%. That's, you cannot ask for anything more if you are long a position and you got 92% and a flat stochastic going on for weeks. Although when it goes on for weeks, when it finally turns down, it can turn down very heavily. So that's what I'm watching. When the stochastic in the weekly chart goes under 80%, you've got yourself a really sharp sell-off. But here's even more important. What I'm looking at here, I just need to check this. It was important. Okay, good. Text. So what I'm looking at here, I always put E/A and let the market tell me what's next. Why? Because E says, oh, you got to be careful. A says, are you kidding? Any pullback after this. But when you've had a huge move like this in the weekly chart, in the monthly chart, this is where you've got to be somewhat cautious. And that's why I'm saying at this particular point, I have to look at the gold, and then I have to look at something like silver. Silver's playing real good catch-up today, up $1.06. I mean, that's good, 31. Remember, I have this theory that gold, that's like cat and mouse. Gold goes up and silver's kind of hanging. And so he says, hey, gold's moving, I've got to go. And then gold rests, and then silver catches up. And then silver kind of takes a breather, gold goes up, silver catches, and then the second time that happens is usually when they both go up together and then they both come down sharply together. Right now we've got a divergence. Gold's much stronger than silver, so silver's playing catch up, and if you look at some of the silver stocks, they just had a really good move today. So that rotation to me says it's really important. Remember, scales of justice, you look at something like China, huge China, and you've got all these 60, 70, 80 countries on the other side. But China is the big weight over here. It's not what these guys do. It's what they say. Well, it's the same thing here. You've got the scales of justice. You've got gold going up, silver takes a breath. And the other one, when they get imbalanced, then you've got to be careful to see do they both tip over. Well, this is a good sign. So that says if you're looking at the dollar, I've got a lot to cover here. Okay, the dollar down very sharply below the low that was made last year in September. This is important because it's saying, and I always talk about gold, the dollar as if it's probably a an icon of our American currency. This is saying there's a lot of pressure. If you look at the EUR, which kind of goes together with gold very often, that's a huge breakout. And look at the monthly chart, a breakout of the Chapman Wave inside track repellent zone from that peak C1, C2. Is that now a D or a brand new A? All right? But it's a C in the weekly chart, and that just says there's more to go to the upside. There's a C in the, can I get it? I've got a break coming up. I think I'll answer back in a few minutes. So here we go. Okay, so we've got leg C on the euro. Look at the USD JPY. USD JPY going the opposite way. It looks like the dollar, right? But it hasn't taken out the September low of last year. But it's arching the dreaded H. You went from a cup formation to an arch formation. So this is something to monitor real closely. So what I'm saying is that I see signs within the market that there's an attempt to find some kind of a base. If the market rallies strong, should I do this right now? Yeah. So this is mine for my subscribers. Every day I do the Dow chart and I do an analysis. I do the analysis for my traders corner, all the stocks that we were involved in and what we're doing. And here I say, let's see. Today, I say Dow closed down minus 10.14, and there was a Chapman Wave red Roman candle suggesting the market still has residual strength within its tariff weakness, tariff fear weakness. And then I say today, if the Dow can hold to plus 250s or more after 1:45 p.m. Eastern Time, expect an up close, but slipping to minus 180s or more at that time, that's at 1:45, and weakness will prevent yet again from running into the close. Early action suggests a rally attempt is likely, but it must hold well. We've got that right now. The Dow's back up 35. So within that context, so those are the currencies. I want you to go to where was the question? Yeah, the XLF. It's really important that we monitor the XLF, and there's really nothing to monitor. It's just kind of up 13 cents today, 46.03. The next thing we're looking at is all the resistances. Look at this. Chapman Wave automated resistance. So you've got, look, this is the 1 minute chart, peak A, peak B, peak C, leg D. In the 1 minute chart, what did I say, the 200 period moving average? We're back at the 200 period moving average, the magnet line. Can we this time break above it and go into the 53.40 area? Is that just way too optimistic today? Well, what I want you to say is that if the Dow at 145 is able to hold over 250, that's a big ask because there's a lot of selling going on. Then what we might find that regardless of weekend nervousness about what happens with China, that just the weight of the selling pressure being relieved pushes stocks up at that time, regardless of what could happen on the weekend. That's kind of what I would like to see. Who knows if that will happen. The next question I had was, could I look at, let me move this, high-grade copper. Sure. High-grade copper, HG, there we go. High-grade copper is up today, up 13 cents at 4.46, trying to get to the 200-period moving average of 4.499. So it's at 4.468 right now. It's working its way a little bit higher, but that weekly chart says, it's got a long way to go. It took out all the left side low support levels. Even in the monthly chart, you can see not a great looking candle. I would like very much at some point, end of May, beginning of June, to see high-grade copper not under $4, but actually over $5. I think that would be a really good sign. All right, so that's I did that. We're looking at, in the den, I see a mention of M2 money supply. So I remember way back when I used to read Barron's, and I used to be quoted very often in Barron's, there was, we would wait for them, I think it was Thursday, wait for the M1, M3. And then it was the M2. And then it was the M1. That's the money. That's the total flow of all money. And then I decided, you know what? It's just a one-day phenomenon. It really doesn't change anything to the patterns for the week. It's just another data point. That's all. So that's the same thing that, when we get the 8:30 news report, how many times has that been a harbinger of a major market trend if that trend isn't already in place? Very seldom. It just continues whatever the trend is. Dow's down 45, S&P's down 2. I'll be right back. Basil Chapman, Tiger Ignition Zone.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So I believe this is PSLV. It's the spot physical silver trading at 10.81 up 29 cents. It's almost filling in the gap from a week ago. This is trying its best to move to the upside. I don't think it can continue to do that if gold slides over the weekend into Monday. But so far, gold is still. Let me just check if it's pulling back, because gold was up huge. Gold was up. It's still up big. It's up 68 at 32.45, 3,245. Leg D in the weekly, leg D in the monthly. And as I say, I have to call this either an E. This one did go pink. You see, there's a legitimate reason for giving a down arrow. All right, so let's go to the PSLV. And I'm just going to say there's a really good chance that if you are in this, you're in the right position. If you got in the day before, if you're getting in right now, you got a little bit more of a risk. So PSLV, it has to hold 1060 through Tuesday for falls back below that, I think that's a problem. Right now, it's moving higher. To get the 9 crossing the 14 to go green from pink, you'd have to get up into the 1098, 1120 area. But yes, it is rallying very nicely. So with that said, we're about to hand you over to Steve Rhodes, and Larry is doing his show right now. It should be a great show. What a day to do it. It was whooping up and down and up and down. But in the meantime, back around, check out my opening call, my daily newsletter. And we've got cash. We've raised cash. We are going to be putting it to work. Any big rally, you're going to be able to do some shorting on some of the stocks that are still vulnerable. But at the same time, there are some stocks that are just attempting, independent of the market, to move higher. I've listed them. And there's another thing that's doing very nicely. That was corn. Tukrium corn fund. Up very nicely today, and that's doing so. I don't look just at stocks. Look around. That's what I like to do for subscribers, to go into different places. So have a wonderful day, and let's see where the market closes. Certainly at quarter to 2, we'll be looking to see if it's up 200 or more, or it's down minus 80, and that kind of gives you the end of the day close, I think.